Hello, good morning, and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Friday, the 4th of June. Now, it's Non-farm Payrolls Friday today, and that's going to be the key focus across major markets. What we saw yesterday was a decisive move to the upside on the dollar. We've started to see signs of a dollar rebound in recent days, and it really took off yesterday. We had a much better than expected ADP employment number, which really did help to boost how the dollar was moving yesterday. And the dollar rebounded and had a key move that was breaking key support levels on forex majors such as euro dollar, the Aussie dollar, and a breakout on dollar yen as well. So that's the key move that we're looking to analyze today. Is this move going to be continuing upside for the dollar? Will it continue a recovery, or is it just a little knee-jerk move that subsequently gets dollar selling going once more? So that's the question that we're going to be focusing on post payrolls. So with regards to the INFINOX support and resistance table, don't forget that's at the end of the video for your levels. So on the charts that we're looking out for today, as I said, these key moves that we've got on dollar means that a breakdown on euro dollar is a really decisive move that we need to be watching now. So how the market responds to that is going to be key. We'll look at the charts. And also on the Aussie dollar, a key break of support there. Again, we're looking at the implications of that move. But also with regards to commodities, with the gold price breaking down decisively. Biggest down day since February on the gold price. So how's that impacting on the charts? So let's have a look. And onto the INFINOX MT5 platform now, and we can see that euro dollar has now broken this uptrend that we've been trading in since the beginning of April. Now, this is a fairly similar move to what we saw in November, December time, where the uptrend got broken and then it started to go on quite a consistent trek lower. And what we've seen is the momentum indicator on the RSI, the relative strength index, breaking down below 50. So this really does become an important moment. Let's zoom in one more level, and we can see that the market has now broken below all these old breakout levels of old resistance, which should have been supportive, and they were supportive throughout the past week and a half until yesterday with that decisive bear candle that we saw. And now the market has broken the trend, but also broken below the reaction low that we saw last week. So effectively that completes a double top pattern, which implies around about 120, 130 pips of downside, which gives you a target, implied target of 120 big figure area. And again, this old key support line. So how the market now responds to this old support, which is 121.40 area up towards 121.60 area, how the market responds to that during the payrolls report will be key. Payrolls are expected to come in at 645,000 jobs today, and the ADP number was up in the 900s yesterday. So is that going to be indicative? If it comes in the 900s, you could see a sharp dollar strengthening, and I think that would be pulling euro dollar lower, at least to test the 120.50 area, and maybe even 20 big figure again. So be careful with that. Let's have a look at the 4-hour chart very quickly. Yeah, the support lines come in, sorry, the old support lines come in around 120.30 to 120.60 area. So that is now resistance on a near-term basis. And looking at the Aussie, we've been trading sideways on the Aussie for a number of months now, but there was a key breakdown yesterday on that stronger dollar move that pulled Aussie dollar lower below the support at 76.75. And now, again, similar to euro dollar, it is now the reaction to that old support which is going to be key. How does the market respond to that? Does that now become resistance? There's a resistance band, you can argue, 76.75 up towards 77 big figure area. If that is now treated on a rebound as a basis of resistance and the market then sells into that move, we could see a decisive correction lower towards the 75.50 area. Look at that RSI breaking to levels not seen since early April. So this is turning corrective on the Aussie dollar as well. Looking on the 4-hour chart, you can see old support coming in around that 77.10 down towards 76.75. So that is your basis of resistance now. And finally on the gold chart, well, this big run higher that we've seen, this uptrend channel over the past few months is still intact, but it's the biggest downside day that we've seen actually since February, and that gives me concern. It's not a decisive break lower; it's still intact on the uptrend. actually the response today to the initial selling pressure has been positive, but how does the market again respond to payrolls is going to be crucial. How does the market respond around this 1880 area of resistance, that old support of that low reaction low last week? So again, this is a key reaction, how the market reacts to this move to break down in the next session or so. Look at that RSI on the 4-hour chart, now decisively corrective. So does that now, a breakdown below 1855 would be a decisive move, I think, and turn this market corrective. So thank you for watching this video. Good luck with your payrolls trading, everyone. Join me again on Monday, where we'll be looking ahead to the new trading week. So with that, I'll leave you with the INFINOX support and resistance table, and I'll speak to you then. Thank you very much.